Welcome to TradeTheMBI.com. This is John. This report is for, the last day of the year, December 31st. And boy, it was interesting because we knew we had some potentially ugly readings for what we were seeing on this second move up here on the expanded ratio histogram. And like I said, if we didn't get what we were looking for, we would want to start to think about getting out of long setups, but it decayed even faster than we could do anything with other than our futures. We knew that we wanted to stop, but that's part of what happens. And it was interesting because you get some of these positive readings, like from the Power Mo, we have the cyan over the yellow. That's good. -7 on the shakeout, not horrible, but with this decline now, I expect to see the yellow move below the blue line here to give us our next advance warning of a long setup. But now you have to look for that full ratio size setup where we look for it to dip below the -13 and then move back up before we would expect a significant uptrend to return. So that was bummer, particularly coming off of this crazy series. And this was interesting because, like we said, it was occurring on the cash index, not on the futures. So we were getting some imbalance with a couple of the readings that didn't cause us to be afraid of anything. It's just nothing you can do in that particular setup. So we came down to this 14. Well, we broke that 1403, a little bit less than it. 1394. Now it's interesting because futures, once the market closed, continue to just cascade lower. It was sort of what I refer to as like a liquidity withdraw, and they just kind of pull the bids. And in fact, I'll try on the futures over here. You can see market closed here, and then boom, they just did not support anything, and that was a direct result of fiscal cliff stuff. You can make that case, or just an attempt to clear stops. You start driving a little bit lower. It's easy to get rid of people, and that way, if they want to do anything on late Sunday, they can do that without much interference, since you've wiped out a lot of that supply already. Up-down power standpoint, still a little bit negative. We would need to see our first improvement before we would expect any pop in that. And any pop, though, within that ratio size is not going to be a long setup as much as a point where you would look to get more defensive. And that's probably what will end up happening for us to start the year. So bottom of the Bollinger Band actually was just a little bit below it. No issue with that one. And 1396 is what we had for downside. And not horrible. Well, you're down to a 1 on the price oscillator, so you really can't get a whole lot lower than that. But that doesn't necessarily mean you're going to get pop. Particularly, what you can get is just a little bit of sideways cross action from that particular setup. From our SSO, we go ahead and take a look at our SSO. We sold the 60 puts. We were looking for 75 cents on that setup, so that was going to give us a 59.25 entry, right up at about here. And you can see the price dip down to that particular level. We'll wait for a pop-up. At that point, we'll gauge, see what the market looks like, and decide whether we want to sell a call into that or sell our shares. And so we'll go from that particular set. Because it's interesting, when I look at my shakeout readings, yeah, fine, we moved below on the extreme, but much higher shakeout compared to the same previous low. And we're seeing that. So is this, a little fake dump? We'll know more Monday. Even though it's a half session, it'll give us a little bit better clue going into the start of the new year. Looking at gold, kind of flat from this overall setup. It's not overbought, oversold. It's actually a fairly bullish setup. It's still looking for that target right up here. In fact, if I highlight that, it was like 162.12, but still -27. And it's like, I try to point these out even with the stocks. It's like when you get to these ugly levels, the shakeout, you have to have a nice strong move in order for it to be sustainable, and oftentimes they'll pop up a little bit and then just fade back into them. Just the opposite kind of setup. Look at that USO. Now we got out of our USO, got called away. Fine, we got our 32.62 because we had the 32 calls. We got 62 cents for them, so fine with that. We took our win on that setup, and we just began to clear our slate and be prepared for the start of the next year. Still a little overbought in that setup. Not a shock with that. CLF from its standpoint. Likewise scenario, down to 31.64 for our cost basis. We wanted to turn around and sell 37 calls, 60 cents on those. And we took the money that we got from our previous put sale and deducted from our cost basis. So that's why our cost basis moved down a little bit. And we only have 300 shares there. That's a fine position to start off with. X, we were expecting a little bit of a retrace with X, and so we appropriately had sold puts on the X setup. I don't think I have an X, but I can easily go to our member page and click X, just like that. So right here we had sold the 23 puts at 18 cents. That drops our cost basis down to $13.52 from that overall setup. And we looked for a little bit of a retrace. We were thinking that we probably would get down to here, but we had a decent enough overall setup that we were safe at that particular level when we were selling. Got very close to it, and that's fine. We finished right over the mark, and that's all that matters. So holding on to a couple other shares of that, that's fine as well. And WLT, we have a decent position in WLT now. So we're up to 600 shares, 33.76, because we'd sold the puts. Nothing to do with that one at this particular point. It's set for a little bit of a pop. We have upside targets in the 36 range, where we would probably begin to sell call on a portion of it and go from that setup. So no particular problems with any of these things. It was just a bizarre setup with our futures overall. We had added into the setup, but I said if we didn't get past that 14.19 to sell out, that we would have to take a break even on our additional shares. And then even having the additional shares, once the market closed, we had that plummet, and it took us below our stop. We tried to keep us out of the volatility from a daily standpoint, and we had on the first setup, but when you pull that big a liquidity drain of 15 plus points, you can't just, pretend it's not going to change, so we had to take a pretty decent loss for that setup because we had nice 3 contracts on that. And is it a bummer to take that kind of a hit at the end of the year? Yeah, would have liked to have had it go the other way, but it happens. You got to take the good and the bad. And the potential was for a decent possibility, though we knew that the GAM presents the possibility of big move up and down. We were still below the red line, but overall, we still had the positive setup from the previous futures. And if we go and look at that from right here, though these had stopped out, we bought it at a discount, so we were hoping that we would avoid that extra volatility. But within the ratio size setup right there, it looks like it's in full swing. Kind of unusual because it's rare for it to take place when you have the cyan this high up, particularly over the magenta. That's typically a bullish setup moving forward, but it's not going to make us gun shy. If we find additional opportunities, we're going to take them, and we'll continue to attack accordingly. And for the new year, I'll have out the overall portfolio, where we end up, and we'll see where that takes us based on, it's only a partial day for Monday, but nonetheless, we'll still be able to look at it. For dot alerts, those interested in that, we'll be having a nice little special for the end of the week, so that would be Wednesday, Thursday, Friday. So if you're at all interested in those, you'll be able to get all of them, and we decided to add another one. Let me put dot alerts up there. We added, if you can see it, I'll slide it up. We added SLV. So what we're going to be offering is all of the dots, so that's like 15 now, for the price of one time frame, just for those who might want to try them out for the end of the week, because again, these are stocks that we're not necessarily going to cover in our normal portfolio because of the expense in some of them, as well as their volatility. So just another added little feature. Always gives you an opportunity to do different things. Continue to look for me on StockTwits and Twitter, and if you have any questions, please feel free to email us. As always, trade well.